So Meltem, let me first get your take on the thesis that problems with, regional banks in the U.S. have put some impetus behind Bitcoin or under Bitcoin and driven the price higher. Do you buy that?
I don't think it's the banking crisis or the lack of confidence in the banking sector necessarily. I really think a big driver is the decorrelation of Bitcoin with other asset prices. Bitcoin's correlation with global equities is down to its lowest in some time, hovering at around 12%. I think what we are seeing is across all markets is investors, despite the macro environment and concerns about rate hikes, are still fairly comfortable buying risk. And I think we are going into a new crypto cycle. We have a Bitcoin halving coming up. We're seeing a lot of exposure via the derivatives side of the market. So I think it's not just the banking crisis in particular in focus here, but it's really a broader appetite for risk and investors perhaps getting comfortable reallocating and continuing to be exposed to crypto.
How much does the Fed's rate hike path matter, Meltem? I mean, we're expecting another increase in rates tomorrow, putting the top up at 525. And obviously, Bitcoin is an asset that doesn't yield anything. With all of this competition, you can get more than 4% from two-year treasuries. Is that a problem for Bitcoin, a headwind?
I don't think it's a problem for Bitcoin specifically. I think where we're seeing more of a slowdown is in the decentralized finance or DeFi landscape, where people are historically accustomed to seeing yields on lending out stable coins or on-chain dollar equivalents. And what we've seen there is yields on stable coins in different DeFi applications are down quite a bit. You're getting about 2 to 3%, whereas, in a treasury, a fairly low risk to risk-free asset is yielding 4 to 5%. It just makes it much more challenging. And we've seen that reflected in the numbers. On-chain activity for Bitcoin and Ethereum in particular, down around 15% in the month of April. Stablecoin activity and volumes down closer to 40% on both the Bitcoin network and Ethereum network. That's the predominant trade pair for most crypto derivatives. So we are seeing a decline in on-chain activity. But I think, again, the investment thesis for Bitcoin, particularly for long-term convicted investors, such as MicroStrategy and others, is still very much there.
Well, as we're talking about the investment thesis, though, there's the question on regulation and how that may hamper the investment case. And on the regulatory point, Bloomberg spoke earlier to Charlie Morris, the co-founder of the VC fund CMCC Global, who said that the U.S. crypto crackdown is opening up opportunities elsewhere, specifically for Hong Kong. Listen to what he said.
US as being quite negative from the regulatory perspective, and it really kind of seems to us that the US is really shooting themselves in the foot with a machine gun, and that gives kind of a golden opportunity to other regions of the world.
Shooting themselves in the foot with a machine gun, Meltem, it's quite strong language, but is that also kind of your sense of what really is going on here?
I think it's really important to differentiate who is actually in the market and what market participants we're talking about. When it comes to derivatives, as we saw this week with both Coinbase and Gemini, two very US-centric, US-focused exchanges launching offshore derivatives-focused platforms, certainly the derivatives part of the market has shifted overseas and continues to be overseas. I think we do have a fairly healthy and robust crypto ecosystem here in the U.S. There are many regulated on-ramps, whether it's crypto native companies or fintechs and other more traditional financial players. But I think the biggest challenge is where's growth going to come from? And by and large, the derivative side of this ecosystem is still the largest and drives the majority of interchange. And that certainly has shifted overseas and continues to trade overseas.
Speaking of where growth is going to come from, what's next for Coinshares specifically, Meltem?
Well, we will be reporting our Q1 earnings fairly soon, so be on the lookout for that. And in those earnings, we'll share more on our strategy. But given that we're publicly listed, I'm not going to say anything that we wouldn't put in our financials and our quarterly update.
Can I ask you about stablecoins, Meltem? Because this is an area where, Kayleigh talks to regulators all day long on the Hill. This is an area where people on both sides of the aisle are confident that we could get some kind of regulation. And we've seen Tether come back to a market cap of, $80 billion almost a year after the collapse of Terra Luna. Do you think stable coins are, the way forward when it comes to a U.S. foot in the door?
I think stablecoins are certainly seeing a lot of traction. And what's really been exciting over the last 3 weeks is 3 major U.S. payments companies, PayPal, Visa, and MasterCard, have all announced initiatives to expand their utilization of public blockchain networks, not necessarily with the underlying native crypto assets, but with these stablecoin assets. And if you think about the challenges just in the U.S. payment system, the Fed is launching FedNow, their faster payment service, in July. It's going to be slow phased rollout, though, low transaction limits. But we have all of these frictions, particularly moving money cross-border as well. And this is an area where I think public blockchain networks and this idea of a currency for the internet really shines. And so I think we're going to continue to see integration of stable coins, not only into the payment system, but also very importantly with the shutdown of Silvergate and Signature, both of whom had 24/7, 365 cash settlement networks. We're going to be seeing the utilization of stable coins in interbank settlements as well.
Meltem, how much does FedNow, which is supposed to launch this summer, disrupt that?
I honestly am curious to see that as well. I think I'm not as optimistic about FedNow. As I mentioned before, the limits on FedNow initially, I believe, will be about $100,000 per transaction. If we look at crypto, crypto really is this big hot ball of money. It moves in high volume and high velocity, high speed, all around the world. And so the challenge is, how is something like FedNow going to interact with this big hot ball of money? I just don't think initially it will have the size, the scale, the capacity to handle that. And then more importantly, the question is, what are those key corridors where we're seeing trading happening? If we see the crypto derivatives market continue to move offshore, and if U.S. trading platforms like Gemini, Coinbase, and others continue to focus their growth and expansion efforts offshore, then I think the impact will be fairly minimal.